Well, folks, what should you be thinking about as we get very close to fall 2024 in the London, Ontario Real Estate Podcast? Welcome back to the London, Ontario Real Estate Podcast. My name is Phil Bailey. I'm a real estate agent in London with the HouseSigma Brokerage in London. And I am happy to announce that just yesterday, the Bank of Canada did lower those interest rates. I think the main question I'm getting right now, and something I really want to tackle on this podcast, is what's happening with interest rates? What could be in store as we get into the fall market? Again, I don't have a crystal ball for you, but I can give you my ideas of what I'm seeing. And also, if you're looking at potentially making a move, should you do it now? Should you wait? I mean, that really depends on your personal situation. So Bank of Canada, they decided let's lower those interest rates by another quarter point. Looks like the economists, people much smarter than me, are saying that those interest rates will come down as we continue into the fall. Obviously, as we get into 2025, likely continue getting down. Right now, we're, I think, at a 4.25. So if we can get those down, I think a little bit further, it could have some impact on the real estate market. Now, the main question I have right now from my clients and friends and some family is, should I be waiting for interest rates to come down before I jump into the market? Or should I just jump in right now and then, benefit for that interest rates coming down over the next little while? Here's the concern that I have with waiting. And again, I'm a little biased here. I am a real estate agent. My concern with waiting too long, if you are ready to buy, and of course, if you're not ready to buy, don't buy, please. And what does getting ready mean? Well, it means making sure that your finances are in order, make sure you have a down payment ready, making sure that you've had a discussion on criteria. If you're buying with your partner, for example, make sure that you are getting something you'd actually be happy living in. So that's the one other side of the kind of the equation here. But I think that if you are ready to buy and you decide, let's just wait for my payment to be lower because interest rates are going to go down, I think a lot of people are going to be in that same position. So I think a lot of people are going to be waiting. And if you think, and again, not an economist here, but if you think that interest rates will just continually come down so your payment would be lower and you can qualify for more house, and then everyone does that, well, what typically happens, and let's think back to what's happened over the last couple of years, interest rates went up, house prices obviously either went down or just things were a little bit more stagnant in terms of they're not selling as quickly or, for as much money, but also they're taking longer to sell. The other side of that is, okay, interest rates starts coming down. Well, what's probably going to happen? Probably, those prices potentially, and again, don't make financial decisions based on this, but potentially, those prices could go up over time when there's more people that can qualify for those mortgages. That said, I think, one thing that I mentioned in a previous video that I did, not on the podcast, but just a video on my social media, is I think we have to be very careful. There's a reason why the Bank of Canada is lowering interest rates, and I think that they have economic concerns. I think if the economy turns sour or things go in a negative direction, inflation obviously has come into check for what they wanted. But what I think could happen is that the whole economy has some issues. And then, buying that house, people buy houses for various reasons. Obviously, people need to live in them. But I think you could be affected by the overall economy playing a role. So it's not just one factor of interest rates, it's a lot of other factors as well. New immigration coming to Canada, people needing homes, people moving from the GTA to the London, Ontario area. I mean, all of these things are playing a factor. So don't just focus just solely on interest rates. But I do think that the trend is going to be interest rates coming down. Obviously, I think in the spring, we noticed a bit of a bump in the market, but what's happened more recently? Well, let's talk about that. So I did pull the numbers over what's happened with the London Real Estate Board over the last little while. And it looks like we've had a bit of, I would call them mixed results. So the number of new listings on the market has actually gone up a lot. So there's more options for a buyer to choose from, which can be good if you're out looking. You might have 3-4 options versus one that you're in multiple offers on. Maybe that's just not happening anymore. In addition to that, we saw that only 577 homes were sold in August of 2024. This was 6% less than what we saw in August of 2023. So August of 2023, in my opinion, was slower. Now we've seen something that's even slower in terms of the number of transactions having taken place. I think we're still seeing a bit of a tug of war between sellers, some of them maybe stuck in few years ago when things were a little bit better for them. They could sell multiple offers and get their house sold very quickly. Homes are sitting on the market for longer. The days on market is going up. And the other thing too, if you look at the stats that I'm kind of looking at right now, is the average price over the same period. So we're not saying month to month, but just average price over August of 2023 versus August of 2024 for just the homes that sold. It's not a perfect equation here, folks. But when you look at that, the price actually did decrease by 4%. So if someone were to buy they probably have a better opportunity in August of 2024 for that price than they did in August of 2023. Obviously, this isn't perfect. It's only the homes that did sell. I think what I'm seeing as a real estate agent, though, is there's a lot of homes that are priced at a point where buyers are just either not seeing them or not making offers that are working. So the seller is at one price in one reality, the buyer is at another, thinking, okay, I can get any price for everything, and I'm just gonna try again on a different option. And I think that's really impacting the market. And I think that there's a bit of a stalemate still happening. I think with the interest rates going down, kids back in school, fall happening, usually we see a bit of a bump as we get into the fall market. I don't know yet for sure what's going to happen. But right now it's still kind of chugging along. I think it's a little slower than normal. But as we get into that fall market, which happens really just in a couple weeks, maybe it's already happening. I usually consider fall market, more mid-September, because we get into a point where kids are back in school. People are thinking about making a move. They don't want to wait till December. So you really have a very narrow window, because what I'm telling clients right now is if you want to put your house on the market, which I have several clients that are in that position where they're thinking about making a move, maybe the best time to put it on would be mid-September, maybe into late September, because then you have at least a month to sell before you get into like the cold November rain days, or the snow comes back. I know, don't kill me for saying that, but if snow comes back, the market can slow down pretty quickly. And then you get into this month called December, where the holiday season takes over, and people usually, and most of the time, I tell clients, potentially just consider taking your home off the market. We'll put it back up in mid-January, kind of see where things are, because there's just not as many buyers on the market. That said, let's think about it from a buyer perspective. So if you're a buyer right now, you have 20%, almost 20% more inventory than you had before. So that means you have 20% more options to choose from. So say you're in a price point, and I find this is a price point that's slightly higher than the average. If you're in that price point and you have options, you can let's go see 5 houses. Maybe you'll like 2, put an offer on one, doesn't work, you try another one. That said, if the seller's not motivated, obviously you're not going to get this sold, but there are some sellers that are motivated. So you have to know who those are. And I mean, I've seen that over the last little while, people that have chosen to purchase another home without selling theirs first. I don't usually recommend that unless we're in a market where we can kind of guarantee, and we're never going to guarantee your success, but make it a lot easier for you to sell that home. I think, say someone's at a price point where they're quite a bit lower. So say you're under 400,000 or something like that right now, maybe it's a condo, and you know that you can actually sell it because there's comparable sales that have happened recently. Some people might choose, okay, I'm going to purchase first, knowing that I can sell my house for a conservative number, maybe even 350 or something like that. What I get nervous about is that there's a stalemate happening in some areas of the market, and you have to be very careful that you can get your home sold at the price that you need to in order to make that new purchase. So I may recommend, just if you know you're moving, put that house on the market, get your number that you need. If you don't get it, we take it off the market. It's not that big of a deal. But say you get that number you need, then you do a longer closing. So say a 90-day, maybe even plus, so 3 months closing. You purchase something, you close that in say 45, 60 days. You have some overlap, you bridge, you're good to go, right? So that's like the simplest way to do it, in my opinion, is to sell. And I've had some clients do this, and honestly, has been, I think, less stressful overall from what I've seen. They might not think that, because they might think that they also now are in a bit of a rush to purchase. But if you have options and you're not overly picky, you're not having to have this exact house that looks exactly like this with a wraparound, veranda, and it needs the 3+ bathrooms that are exactly all white, and the kitchen needs to be, porcelain, like all these things that you really need. Yeah, if you're not overly picky and you can just purchase, okay, I can probably find 4 or 5 houses that would fit my family's needs, then most of the time I'm going to say sell first and then purchase. There's just a lot of risk in the market, and the market is a bit stale right now in certain areas. So if you were to list, you're going to have to compete against all that other inventory that's up in the market. If you're just in a market where there's one house like yours, and there are a few of these that I've sold in the last year, there's one house like yours. Maybe it's bigger than the others in the area. Maybe it's an area that's super in demand. Yeah, maybe you can sell and then and then have a lot more money to work with. Maybe you can even put an offer in conditional to sell. And that's another thing, I will mention on the podcast is that as we get into this fall market, I am seeing more of that condition to sell happening. Some people think it's this like simple thing that we just throw in the offer. Oh, don't worry, we'll have a condition to sell. Everything will be fine. They're going to accept it every single time. I'd say most of the time they don't accept it, actually. From what I've had, if it's a house that's in demand that you actually want, most of the time the seller, if they're really in demand, they're not going to accept your house to sell condition if they have another offer that they could accept with just maybe a quick 5-day financing condition and a home inspection. So be careful just thinking automatically every house is going to accept my house to sell condition, because that's honestly just not the case. That said, if you have a house that's been on the market for a couple months, maybe they're willing to give you an at bat to see if you can get your house sold. So typically how that would work is they put a condition in the offer saying we need to sell our house by a date. So say it's typical maybe 30 days in advance of that or 45 days in advance of that. Then the other side will say, yeah, I'm cool with that, but I'm also going to put in what's called an escape clause, which means that if I have another buyer that purchases my property, I can accept that offer conditional on you not firming up your offer within 48 hours. So you still have your chance to firm up that offer, but if you can't because you haven't sold your house, well, obviously you got to get out of the deal. So you get your deposit back. It's fine if you want to go that route. That said, most of the properties that I have that are in demand, we wouldn't have even considered. Most houses I've sold that are over asked this year, or something where someone's able to come in and get into either a multiple offer situation, or it's just a really in demand property. And there has been, I know people say, oh, it's so slow, but I've had multiple instances of multiple offers this year. In those cases, we wouldn't even consider a house to sell condition. So if you came to me and said, oh, a house to sell condition, Phil, I want to put that in the offer, I would say, honestly, yeah, go ahead. I'll show it to my client because I have to as a real estate agent. But you're literally putting what I would call like a poison pill into the offer. So you're just not going to get your offer accepted. There is no way that my client can accept that, especially like what if they've put a house to sell condition in their offer on a more expensive house? Now you're playing this dangerous game of dominoes. And you just can't accept it. So, you're going to be in a spot where we have to be very, very careful just going and assuming house to sell condition is going to work this fall. I don't think it's going to work. These are very narrow. I mean, I've been doing this for like almost a decade now, so it's not like I have 40 years of experience, but I've seen the before COVID time, I've seen the after COVID time, I've seen the COVID time. And, those house to sell conditions are just not, they're not overly common unless it's a house, right now, if you have a house that's over $1 million, it's not getting showings, it's been in the market for 60 days, yeah, try it. But if you have a $500,000 or $600,000 house that has multiple offers or has, 20 showings in a 3-week period or even a 2-week period, be careful with that. Okay, so don't go in just assuming everyone's going to be cool with that. If you don't have the house to sell condition, I think you could be much more competitive and maybe even more picky with the house that you want to purchase. If you're going against someone that has that, you're going to win most of the time, just even if you're at a lower price. So I think that house to sell condition, it's not just like a freebie. You have a cost of that. And there's also, you pay a premium to sell that house purchase that house with a house to sell condition. So yeah, sorry, I went off to a tangent about house to sell conditions, but that is kind of an important factor that I'm seeing over the last little while. I think in addition, as we get into the fall, what should you be thinking about? And these are the things that I normally tell people to think about. Get your darn pre-approval done now. Don't wait and think I'm just going to magically purchase, because that could take you several days to get your job letter from your employer. I've had clients tell me me it's going to take a couple of weeks to get that. So good luck putting a 5-day financing condition in. If you need a job letter that's going to take you 2 weeks, it just won't happen. So talk to a mortgage broker. We just had a mortgage broker on the podcast. You can talk to Spencer about that, or I have multiple great referrals for you depending on what you need in terms of a mortgage broker, a home inspector, all of those things. So just always come to me. Again, like as I refer people to, I'm referring competence. I'm not referring someone who is giving me a kickback or anything like that. I don't do that. So in general, you have to understand that when you're asking someone for referral, usually there's a reason why, and why my reason is for any referral is because I reward competence, and I want someone who is able to do a good job for my clients. And obviously, honestly, have a bit of a similar kind of approach that I have, where I get back to people quickly and I try to get back to them fully. So, get those things together now. Don't just think magically this is going to happen overnight. So get your pre-approval done. I have clients that ask me to look at houses. They don't have a pre-approval. It's unfortunate, because it's really hard for me to do my job if I don't know the numbers that you're working with. Like, don't go shopping. Like I said in a previous video, don't go shopping and not know how much money you have. Don't just assume that you can get that approval done. In addition to that, I would think about your criteria. I've had a lot of clients lately that are looking at upgrading their home. So they're looking at moving from, a smaller detached home to a larger home because maybe they're having another child. Maybe they're in a situation where they just feel like they need more space because their kids are getting a little bit older, or they just, they're tired of their neighborhood. That case, I would really strongly consider putting your criteria together. The biggest criteria point you can put together is your location. So if you're looking at buying this fall, look at what locations you're actually going to be happy in. Try not to just say London to me. You can, but overall, let's go out, see a few houses, and try to narrow that criteria down as we go. I usually like to start a little bit larger, get a little bit narrower. There are some clients that say I need to be in these streets, and if it's not those streets, I'm not buying. Usually that's a school reasoning, or maybe they want to be close to family. So yeah, consider those things and talk to your partner about it. As much as I say I'm a real estate agent, not a marriage counselor, I try my best. We have great discussions, but I can't tell you what you and your partner have agreed on, and I want you to be happy at the end of the day. So again, think about those criteria before you start moving forward with actually seriously looking at a house. So again, that's kind of where I see the fall going. We'll see what happens with interest rates. I'm curious to see what interest rates do. It looks like they're going to continue going downward, hopefully, over the next little while. Some people said the whole economy is going to blow up and that the housing market's going to crash. Well, I haven't seen any sign of that yet. But most of the time I'm seeing relatively flat market right now in London. And I think there are some opportunities for buyers right now, and there's lots of choice out there in the market. So if you have any real estate questions, or you're looking at getting a pre-approval or anything like that, just talk to me. I can point you in the right direction. My name is Phil Bailey. I'm a real estate agent in London with HouseSigma. You can just text me. It's probably easiest, 226-977-2348. Or you can always just go to my website to learn a little bit more about me. It's just www.philbailey.ca. I hope everyone has a great start to their September. I will be back soon to talk to you more about what I'm seeing in the market. We're going to have some guests on this fall, already chatting with a few that I'm really excited to have on the podcast. If you have ideas or questions you want me to answer on the podcast, just again, text me 226-977-2348. Learn a little bit about me on my website, and I hope you have a wonderful day. Talk to you soon. Take care.